Guys, welcome. I'll try and make this thing as short as possible because of time. I'll try to make this thing short as possible because of time. So we are looking at Nasdaq, Nas 100 on Fusion markets. So what I'm gonna show you is my model, how I actually trade the 7 a.m. session or the 7 a.m. pre-market in going to 9 a.m. right. I'm gonna show you that. I'm gonna show you how I actually take trades here and how I actually execute based on ICT model, right. I use ICT model, but I've found a niche inside the 7 a.m. window, right, between 7 a.m. to 8 a.m. to 9:30 a.m. in New York time. So I actually changed my chart to New York. You can change it here. You can use UTC -4, right? So let me show you how I actually scan the market from 7 a.m. because I usually trade 7 a.m. instead. Okay, I'm gonna show you this example. I'm not gonna show you, but I'm gonna show you the executions. Then this is market replay, by the way. This is not me showing you the exact executions, right, but this is market replay on how you should actually position yourself to take the trades when it comes to trading this setup, right. So what I actually wait for is to wait for 7 a.m. to open. Then when it opens around here. Then this is 7 a.m. open. Then the price retraced down to this I have a look at right there. So this is the market gap between 636 and 630. So I use this to filter where I think the market is gonna go, but then I don't usually use this one because sometimes it's not there. So I'm not gonna try and X smart on it, or just X smart that I actually know where the market is gonna go to. But this is, you see how the bodies keep respecting this, but I'm not gonna focus on this. I'm gonna use this one as a factor to understand where the market is likely to draw to, right, so that I can take informed trading decisions, right. So we have this here, which is a minor buy side liquidity. Then what happened is the market opened and rallied down, then went all the way high, crashing it, coming to this I favor look gap right there. Right, we have this I favor look gap here. The market respected it perfectly. What happened there after the market went lower, then went lower to this. Then I was actually on this session. I'm actually on this time space between 7 a.m. to 8 is I'm actually scanning where on 8 a.m. where will the market likely to go to draw to, right. So what happened here, I'm looking for this for relative equal lows, right. We have this, 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 and then we move from executing any trade here. But then if you like, you can execute trades. You can take a trade here, you can take a trade, another trade here, right, because we have this here, right. We also have this here. So then we also have this here, I favor look up. But then I'm not actually focused on executing trades here unless we have CPI or NFP or whatever the news events that we can have on a date, right. I can execute that, but then it's a short-term thing type of thing, right. So it's not like I'm actually thinking that okay, the price is gonna go there or what. So then we wait for 8 a.m. Then 8 a.m. created a low. Then what happened from that low? Then market went high, came to this, then went lower, again crashing this, which makes it what makes it sell side liquidity, right. This one became the sell side liquidity. What happened? What I was expecting the price to increase, right, because it was like more of a sell side liquidity which was not activated, or which was not crashed, right. So what then I expected the price to go high. I expected the price to go high, close here, then come all the way down to this favor look at. But then what happened is the market didn't go there. What happened instead of that? The market retraced back to this I favor look at which we had here. Where is this, right? small tiny small and tiny type of retracement. Then it went lower to this, but I actually used this one as an entry point, right? I entered here, put my stop below here. Then what I was actually waiting for, I was actually waiting for the price to reach here, because upside there we don't have any of those, right? But then we had this I fair value gap, which was very important in this case, right? So I entered here, then waited until the price crashed this bicep liquidity, which had a lot of inefficiencies, with a lot of relative equal lows, equal highs, I mean. Oh my goodness. So then I took the trade here, then went high, then came to this, crashed this one for the first one, then went lower to this fair value gap here. Then how can you see how it's respecting these fair value gaps? Went lower, what happened? Okay, first went lower, then what happened? Went higher, then went lower again, staying inside this window, not coming here, not coming all the way down, right? Then went higher, then came to this fair value gap. Then we were expecting the price to actually come here in a very impulsive move, right? Because we needed to complete this move on the New York Open, right? New York Session Open, which is 9:30, right? So I really expected the price to crash this, then go all the way. I don't care from that point where the price is going, right? But then what happened is I exited around here. Can you see my execution where I actually exited? I exited here, right? Which I used as an exit point, right? Then what happened? The price came to this CC, right? What happened then? Price retraced back all the way down. But what happened here? Then there's a market structure shift here. Crashed it, went all the way higher. Then what happened? Then went back to this fair value gap, which is permissible anyway, but because you can trade something like this, then what I actually saw here was that the potential that the price can go lower into these lows. But what happened is the price didn't come here. You can see probably the price didn't come here. What then happened is the price didn't come here, so I had to close the position around here. Then what happened next? I saw this same as this, right? But then it's a little bit smaller compared to this, compared to the other one that I had on 8, right? So what happened here? The price went low, came back to this. This is a high fair value gap. What were you supposed to be doing here? You were supposed to be buying this, because we had this here. You could have bought this here when it retraced lower, then you could have kept your stop loss below here, because we had already crashed this society liquidity. So then you could have went all the way higher, expecting the price to crash this. This is a market replay, by the way. Then let's see if we're gonna go there. Yes, exactly there. This is how it got to there. Then we had this I fair value gap here, which we had respected it perfectly, then went all the way higher, then came back, then respected it again, then went lower. Then when it went higher and closed above here, then it went all the way down to this fair value gap here. Then what happened next? The price went higher, because the price is broken and showed us that we're actually going higher. I'm expecting the price to, I was actually anticipating and tape breathing the price to come here, because I did not trade from on this, right? I only traded this as my model says. And then went all the way higher, crashing this. Could have exited around there, but because I don't trade after this, because sometimes they can make the price jagging for like hours. When I say that, they can make the price like this for like hours, if like we have NFP or whatever previous day before the NFP, right? So I don't usually engage